Hello and welcome to the latest in Enlit Asia's Expert Insight series. Today I'm delighted to be joined by another of our advisory board members, Yatin Premchand. Yatin is Managing Director of Management Consulting at Black Veatch. Yatin, it's good to see you again. Thank you very much for speaking with me today.
Oh, pleasure. Pleasure's all mine. Good to see you too. Hope all's well.
To begin with, I'd like to ask you about the investment strategies of multinational and development banks in Asia's energy transformation. How do you see these investment strategies being adjusted in view of the ongoing pandemic?
Well, I think we've definitely seen a delay or pushback in project investment, across the region, and I think that's not just across the region, across the planet. There's definitely a refocus on or an interest in seeing how projects can be better evaluated, for example, with the travel restrictions that are in play, and how possibly that a digital play can also be made within that sort of evolving methodology to be able to assess project viability, risk, etc. So with that in mind, things have been moving a little slower than usual. But having said that, over the past month and a half, we've seen a lot of interest from banks, from funds, from developers, all getting together to try and figure out, more proactive ways of moving projects forward. Because at the end of the day, a delay in the project today will actually impact the onboarding of new energy in the next year or 2 years, 3 years.
Sure.
Right? And that's a wider economic impact, not just for the developers and the banks, but also the countries that these assets are in.
Mm-hmm, mm-hmm. Okay. Can you provide some insights on investment opportunities and sector growth forecasts across Asia in view of the pandemic? What perhaps are the core drivers of power sector investments?
So it's interesting you bring that up. I mean, we're looking at a movement from the traditional based fossil fuel driven generation investments. There was a lot of hype 6 months ago or 7 months ago, pre-COVID-19, looking at, we can still build coal, we can still have these supply chains running, we can still move. And now there's been literally a discussion change or a mindset change with a lot of developers saying, maybe we need to relook at this because of supply chains, not just because of pollution and all the other issues tagged with conventional generation, coal in particular. But there has been a movement saying maybe we need to look at hybridization. Maybe we need to look at automation. Maybe we need to look at new ways of deploying energy resources as well. Mind you, the big projects are still there. The numbers are still there. But there has definitely been a shift across Asia on the developer side, starting to explore, the reality of different solutions versus coal. Likewise, I think if you've seen a lot of the articles that are coming out on commentaries from various regulators regionally, whether that be in India, or whether that be here in Singapore, or Indonesia, or Philippines, Vietnam, obviously, China. I mean, we could just go across the whole region. There has been a slight focus or again, a shift of focus, looking at decarbonization, saying, okay, maybe there is another way of doing this, which is less, human intensive, less resource intensive, and regulations starting to change. Lobbies, obviously, there's the lobbyists that are also pushing for that. But there is, I think, a fundamental movement taking place, with respect to moving to cleaner sources of energy that can function under the duress of pandemics, which eventually, will obviously translate into bigger issues that we have, like climate change.
Yeah.
So yeah, there is a trend taking place, which is really interesting, how that's been influenced by disease-based pandemic.
Just sort of continuing from that, since the beginning of this pandemic, there's been a to and fro in articles that I've been reading around what the impact is going to be on the energy transition globally and also regionally. Some saying this is the death knell for fossil fuels, and we will be looking at a clean energy future from now on. And others saying that it's going to be governments focusing on growth at all costs. The economy needs to get back on track, and therefore the energy transition is going to be pushed to the wayside. Interesting hearing what you're saying about regulators just then. What impact has this had on the energy transition in Southeast Asia from your perspective?
Well, energy generation has definitely gone down because of demand change, right? And when you start looking at how demand is changing, predominantly through the reduction of, for example, transport, the amount of basically the amount of transport, versus flights or transit systems, trains, and that side of things, right? You've also got a reduction in manufacturing, which has impacted a lot of the generation that would have otherwise been scheduled and dispatched. You've also got the ability to maintain generation, transmission, distribution, and that's been impacted as well. So now you're looking at resiliency, looking at power delivery, for example, its ability to maintain a certain level of reliability and resilience. So we're taking all that into account. There's an interesting argument taking place on distributed generation versus conventional, again, large power plants with, transmission spanning hundreds of miles, or if not thousands of miles. So there is, with that comes the need for either smaller or distributed type generation, or hybrids. And with that, I think there is no other way to do that other than looking at the energy transition with respect to a cleaner way of building these plants and limiting supply chain risk. So what we're seeing is that there is, again, these discussions taking place in the utilities regulation sector, in the, or should I say the public sector, and in the finance spaces. So there is definitely a progress or progressive movement towards looking at alternatives. I don't think renewable energy is new energy anymore. It's kind of conventional. If you take it quote unquote, it's becoming part of the conventional mix. Power, although it's cleaner in many ways. So there is, I don't think there's been a big impact, and I don't think there will be a big impact on or a shift away from renewable, for example. But more of a thought pattern on how we're going to integrate variable energy generation into the mix. How are we going to look at energy security? How are we going to look at the O&M side? How are we going to address the risk around fuel supply chains? How are we going to look at balancing the changed load profile? With the ability of generation to sort of balance that out, and the cost of all of that. Because you're no longer generating, you no longer have one or two peaks a day. You might have a sort of, more of a harmonious mix of demand across the day and night.
Okay. So in terms of looking at these projects, how are developers, lenders, investors viewing renewable energy in Southeast Asia or Asia as an opportunity, and what do they view as possible project risks?
I think I've covered quite a few of them. I mean, there's supply chain, there's O&M, there's obviously there's the regulatory risk as well with respect to being able to get the permits on time now. Seeing whether different government departments are even opening and functioning to be able to give you those approvals. And those are it's more the administrative side of risk. Technology is proven. So in terms of technology risk, it's pretty much proven. What I would touch on, actually, interestingly enough, is this drive towards, getting plants up and running at a much cheaper cost. So if you start looking at for example, the reverse auctioning mechanisms, the or the reverse bidding mechanisms. I mean, there is a bit of a risk there with respect to how much you're actually committing on the kilowatt basis as a developer versus the viability of that project to operate for 25 years, right? Because if you're going in with a very low bid, although you are going in possibly with some very good proven technology, there's always the risk that on the O&M side, right? And if you're going in with some decent technology, but you haven't covered that risk because you're going for the number, that means that you might have a chance in 5, 10, 15 years where the project won't be viable anymore. And if it's not viable and you can't generate the commitments that you've committed to the grid, then that creates a much larger issue with respect to access to the required amount of energy.
Sure. What tips do you have for creating bankable renewable energy projects in the ASEAN region?
That's an interesting one. Lots. No. It's so address technology risk. Look at a viable return on capital that allows you enough flexibility to be able to measure some of the risks I just mentioned, with respect to O&M in particular. I think looking at a more performance-based approach would be the way to go. And looking at how to use digitalization on asset performance management, managing risk, is where investments should look at, and bundling that in with respect to addressing risks before they actually take place.
Okay. We've touched on some of the impact of the ongoing pandemic on investment strategies that's driving the energy transition and the energy transition itself. Beyond this, what long-term impacts, if any, do you expect this current crisis to have on the regional energy sector?
Long-term impacts on the current energy sector.
Yeah.
Well, one of them has to do with that balancing of load versus generation, and where returns on investments will take place and how that will be managed. The other impact would be around the human capital, right? So it's got actually two, or human resource, if you will, and there's two aspects to that. One is on the risk of being able to, or not being able to have the right kind of human capital on site to manage and maintain, whether that's generation, transmission, distribution, endpoint solutions. And the other is the ability for us to remotely control, manage, and predict how systems are operating. Right? And where those risks are for downtime, for example, unplanned outages. And that little mixture of where we as humans participate physically, that is where things are going to be. I see that as a risk with respect to the scale and speed at which utilities, regulators, investors actually adopt digitalization. Because the longer it takes, the more risk you're exposing yourself to. And yes, there is a cost, but the avoided cost far outstrips the downtime cost. So you have I believe a couple of weeks ago we had a session on this, looking at how a few milliseconds or just a few seconds of downtime on a power plant, even less than that, pays for these solutions straight up. So likewise, when you're looking at transmission distribution, you're looking at the aggregation of distributed energy as a resilience mechanism. The same concept applies. The same rationale applies. Literally, the avoided cost is a huge driver, or should be recognized as a huge driver to reduce it. I think I've only covered two elements there.
I suppose my last question, and I think you have touched on some of these, and therefore perhaps you can come up with another one. What would be the three trends that you see impacting the industry most in the next, say, 3 to 5 years, and how is your business within Black Veatch aligning to capitalize on these?
So one is digitalization for sure. The other one is, in enterprise, or should I say, well, enterprise asset management and performance and risk mitigation through that digitalization. And the third is resource planning. How do you deal with variable renewables? How do you firm up that power? How do you look at the price mechanisms, for delivery on the demand side? You look at, optimizing network costs and utilization. The emergence of new energy markets, for example, would support that. So taking that kind of forecast of so three things, right? Digitalization, asset performance, and the risk management part, and then integrated resource planning.
Okay.
That kind of fuels all of that to give a more robust, more resilient energy system, if you will, or access to energy at cheaper rates, as more sustainably generated, more sustainably obtained, more reliable, and things like that. And that's what I see moving forward happening, or at least should happen. And I think there's a lot of conversation around it. Anyway, it's just now about how do we design these systems? How do we design the business models that go around this for utilities? It's no longer, I'm generating power, I'm transmitting the power, and we're getting paid, and that's what it is. That's not how it's going to move. Okay. It's literally the system sort of approach where business models need to be created out of different parts of the utility value chain that actually fuel investments into the modernization of our power infrastructure. And that's where we actually sit as a company and as management consulting in Black Veatch. I mean, our a large part of our offering is classic management consulting and strategy development, right? So looking at how we can support utilities, regulators, financiers, insurers to lower risk, to forecast where risk is, and more importantly, the systems and solutions that can be adopted to sort of enable more reliable, cleaner, sustainable power at lower costs that basically cater to this changing dynamics of demand. Okay.
Fine, great. Look, Yatin, that's it from me. As always, it's a pleasure speaking with you. Thanks so much for sharing your insights, taking the time to chat today.
Pleasure is all mine. Look forward to the next round.
Absolutely. Take care.
You too.
All right.